Hello, very good morning to all. I'm Kelvin here again. Welcome back to today's Daily Dose of Market Insights. I hope that you guys have a great, restful, and wonderful weekend. Very good morning to all, and welcome to a brand new week. Today will be Monday, the 9th of June 2025. So before we kickstart today's interesting day ahead, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or the likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick recap what has taken shape on last Friday and as well as in today's early Asia session before the start of our daily dose at 11 a.m. today on the respective key important news flow, economic data release, and as well as their impact on the various broad-based cross-asset classes. So let us start with the FX market first, pertaining to last Friday non-farm payroll data. So on non-farm payroll data, the market was the market for the data for non-farm payroll, for US came in better, slightly better than expected. So market is expecting a rather low ball number of 130K jobs added, but it came in slightly better than expected, 139K jobs added from 147K jobs added in the previous month of April. But however, this 147K jobs added, if we look at it over here, it was revised downwards from 177K. So overall, actually, if you look at from a trend perspective of that non-farm payroll data, since the start of this year, January, the numbers has been below 180K. So it's a rather kind of a moderating US labor market, and with the risk of slowing down as well due to the uncertainties surrounding this erratic way of the current White House implementation on the global tariffs against its trading partners. But market participants tends to actually be very short term on the intraday basis, and that drove up the dollar. So what you could see over here is that given this so-called lack, not so bad non-farm payroll data on Friday, which is 139K absolute amount, way above 137K, but the underlying labor market is not that rosy. Why do I say that? Because the April month of 147K print was actually downward revised from 177K previously. So but market chose to ignore the trend, but rather focusing on the absolute headline number, which came in better than expected. So that actually kind of drove the US dollar higher. So what you could see over here is that the US dollar, okay, one second. So this is the 5-day rolling performance of the US dollar as we are speaking right now. So on Friday, upon the release of the non-farm payroll data, market actually the FX market starts to see signs of the dollar strength coming back. That means we have this dollar strength gaining strength on last Friday. So that also came in within our expectation. Why? You still recall, for those who followed my daily dose on last Friday, we do have a bullish bias on the dollar yen, expecting it to squeeze up towards the 20-day and the 50-day moving average at 144.80, which already met 144.80, and also the Aussie dollar to actually tumble slightly downwards towards the middle half of that sideways range configuration that is in place since April this year. And also the sterling dollar and the euro dollar also shaped that respective pullback as expected, as well as is played at the pullback of this euro dollar and the sterling dollar came and challenge the short-term pivotal support level, which we highlighted on last Friday. So later I'll touch on more about the intraday technical outlook on the FX market for today. But what's interesting over here is that we start to see the dollar strength dissipated, especially against the dollar yen. So what I could see is that the dollar yen now is now inching downwards, and on the intraday basis is down by negative 0.25%, and on a 5-day rolling performance basis, the previous gain that was seen earlier on last Friday starts to trend downwards, and on a 5-day rolling performance basis, the dollar yen is down. The gain is now much lesser to negative 1.22% over here. All right, so net overall, we could see as we are speaking right now, the dollar strength that was seen on last Friday seems to be losing traction. That means upside momentum of dollar strength is losing traction, and for today, potentially we may start to see a bit of a dollar strength reversal. Later, I'll touch on more on the short-term intraday technical outlook when I cover the second segment of today's daily dose. So just to make sure that the chart is working and the audio is good, let me do a quick check first, do a quick double check. I think it should be fine over here. It should be fine. All right. So another data on another interesting point I'll touch on is the strong rally that's been seen on the major US stock indices on last Friday. So on last Friday, the all the US majors, all the 4 major US stock indices closed in the green. The SPX is up 1%. The Nasdaq 100 is up also 1%. The Dow Jones also up 1%, 1.05, and the outperformer, the Russell 2000, up by 1.66%. Later I'll touch on the Dow Jones Industrial Average, the DJIA, which is the US Wall Street 30. So the Dow Jones Industrial Average managed to clear above its 200-day moving average, which is a pretty much bullish milestone now over here. And the reason why last Friday we start to see this continuation of positive optimism that is being seen in the US major stock indices, in fact, in almost entirely of last week, is because of the potential US China trade talks, and that led to the one-on-one phone call between the two superpower leaders, that means between US President Trump and China presidency, that they managed to have a talk on Thursday. And on Friday, there was actually a signal stating that they have already set dates for the next talks to come in. Still recall that the first talk has had taken shape on in the month of May in Switzerland, and this time around both countries has firmed up that both respective trading officials will actually have a face-to-face meeting, in fact, on today in London. All right, so later I'll touch on more on the third part of the segment today, and this is one of the key data to look out for today. And because of this potential signs of what you call it, de-escalation between these two superpower, given the fact that right now both of them are willing to hold trade talks after the one-on-one phone call between the respective two leaders, between US President Trump and China presidency, that led to this two countries trading officials face-to-face meetup today in London. All right, so that actually causes the market to the US stock indices to rally, and as we are speaking right now in today's Asia session, there is some form of profit taking, but not a sell-off. So the S&P E-mini futures is down by negative 0.18%. The Nasdaq 100 E-mini futures is down by negative 0.23%. And also because of the dollar strength that is being seen on last Friday, we start to see the the gold versus the US dollar, pardon me, the XAU/USD starts to shape that pullback on last Friday, where it sold off by negative 1.3%. So this down by negative 1.3% actually broke our very key tighten short-term pivotal support that we have on last Friday. On a marginal better risk management perspective, on last Friday we have a tighten key short-term pivotal support level at around the 3,325 level. But what's interesting over here is that as we are speaking, the sell-off on last Friday seems to be stalling at the 20-day moving average, all right, which is at 3,300 level over here. All right. So later I'll touch on more on the short-term intraday technical outlook. Where do we expect gold prices will be heading on for today, potentially from a technical perspective. But what's interesting over here is that as we are speaking, the selling off of the last Friday selling off of the gold XAU/USD managed to actually start now at the 20-day moving average at around the 3,290 level. All right, later I'll touch more about it on the second segment of today's daily dose. All right, so before we touch on the intraday technical outlook, there's one key economic data to look at, will be China inflation data that is out earlier at 9:30 a.m. Singapore time today. So for China inflation data, I would say that it's rather a mixed bag figure, but there is still signs of deflationary risk coming in the picture. So despite the fact that the inflationary rate on a year-on-year basis came in better than expected, so market is expecting a slightly dip down to negative 0.2% year-on-year from negative 0.1% that was printed in April. But the actual numbers came in below what market is expecting, better than what market is expecting at the same annualized rate of last month April at negative 0.1%. But however, the PPI, which is the factory gate prices, that means i.e. the cost of a business in China, continues to decelerate on the downside. All right, it continues to show signs of deflationary pressure. So previous month was negative 2.7%. It came down way below, showing signs of deflationary accelerating, negative 3.3% in May, and also slightly above what market is expecting at negative 3.2%. So this also addressed to the fact that the Chinese economy is still in the state of softness, where there could be where market top policymakers, in order to offset weak business and consumer sentiment due to this uncertainty between the trade deal or trade tariffs impact from US, potentially could hit a double negative whammy to the state of the Chinese economy. China policymakers got to be much more forceful in terms of having their expansionary policy, both from the monetary side of the things and the fiscal side of the things. So despite this bad data coming out from China from the PPI perspective, but because of this bad data, market participant is now expecting China policymakers to act fast in enacting their expansionary plans to offset these weak sentiments from the uncertainty surrounding US tariff. And because of this, the Hang Seng indices rallied by 1.2%, and the Hang Seng Tech, the higher beta one, rallied by 2.7%, and even the China A shares market, as being we call it monitored by the CSI 300 index, is up by 0.4%. All right, so rather in strong intraday bullish sentiment that we are seeing now on the Hong Kong stock market, and as well as the China A shares market. All right now, okay, so now let us now jump quickly to the second segment of today's daily dose, which is the intraday technical outlook. All right, so let us start with the FX market first. All right, on the FX market, so let us start with the euro dollar over here. So the euro dollar last Friday, we do have a pivotal support level at the 1.14 figure level. So price action challenge at this level over here. They challenged it on last Friday before in today's Asia session, it managed to stage a recovery. Right, so we start to see a recovery over here as it starts to shape a higher low, right, a higher low above the low of last Wednesday, and also the RSI also starts to slope upwards. as you could see over here. Okay, and it also broke above a parallel descending trend line resistance. Okay, from here, right, and right now is above the 50 level mark, indicating the resurgence of upside momentum for the euro dollar, at least from a short-term intraday basis. All right, so with that, I will use adjusted short-term pivotal support level for today at 1.1360, which is confluencing the minor swing low area of 4th of June and the congestion area of 30th of May over here, and also very close to last Friday intraday low of 113.86. So using 113.60 short-term pivotal support level for the euro dollar, still maintain our intraday trend bullish bias. First resistance level to watch for today on an intraday basis will be 114.80. Only a breakout above 114.80 may expose the next intermediate resistance at 115.65. However, if price action have a bearish breakdown and the hourly close below 113.60, today's intraday bullish bias will be invalidated to see the extension of the minor corrective decline that has taken shape on last Friday to expose the next near-term support zone at 113 figures / 112.70, which confluence with the 20-day moving average and the 50-day moving average. So I'll be watching very closely if price action can't hold today 113.60 and broke down below during the European session and revisit the 113 figure level, 112.70 level. So this will be a very key inflection zone for a potential bullish reversal to take shape. Why? Because it confluence with the rising 20-day and the 50-day moving average. Next up will be the sterling dollar. So the sterling dollar also challenged the first pivotal last Friday pivotal support at 135.35 before shaping that higher low that's being seen in today's Asia session, and also staged that bullish reversal right at the former minor descending trend line that I drew from the high of 26th of May and 27th of May, and it turns into a pullback, a near-term pullback support where price action tested it on last Friday, and in today's Asia session it managed to shape a U-turn from it. All right, so and also the hourly RSI has already started to slope upwards and also broken below a former descending resistance and now above the 50 level as it starts to slope upwards. All right, over here. And what we could see over here is that the current condition on the hourly RSI is representing a return of upside momentum, at least from a intraday short-term perspective. So with that, I'll be using an adjusted short-term pivotal support for today at 134.90, which is so the former minus swing high of 30th of May and coincide with the minus swing low of 3rd of June. So 134.90 adjusted short-term pivotal support, maintain our intraday trend bullish bias for sterling dollar. First resistance level to watch 136.40. Only an hourly close and a bearish breakdown below 134.90 would invalidate today's intraday trend bullish bias to kickstart an extension of the minor corrective decline that was seen on last Friday to expose the next near-term support level at 134.20, which will coincide with the rising 20-day moving average. So that's for the sterling dollar. Next up, the Aussie dollar. So Aussie dollar last Friday we were bearish. So the bearish bias we mentioned that is only a push down towards the middle part of this sideways range configuration that is in place since April over here. All right, since late April, it's been congesting in the very sideways range configuration. So on last Friday, our bearish bias is only pushed down towards the middle part of the sideways range or the upper limit of the sideways range configuration, which almost hit the support level at 64.75 over here. So on last Friday, it printed a low of 64.79. So I'll be using 64.75 as my short-term pivot as my short-term pivotal support level for today, and we will flip back to a intraday trend bullish bias for it to actually revisit the upper limit of this sideways range configuration at 65.37/64.45. Only a clear bullish breakout above 65.45 over here will indicate a bullish breakout from this 8 weeks, I would say close to 8 weeks long of sideways range configuration to expose the next near-term resistance level at 65.80 in the first step from an intraday perspective. Okay, so 65.80 is the congestion area of 8th of November and 11th of November last year. Okay, the minor congestion area. However, if price action starts to break down again and have a hourly close below 64.75, then today's intraday bullish bias will be negated for the Aussie dollar to float back down towards the lower part of this sideways 8-week sideways range configuration. Next near-term support level to watch will be 64.55, which correspond to the 20-day and the 200-day moving average. A breakdown below 64.55 exposes the minor swing low area of 29th of May and 30th of May at 64.07 over here. Right, so that's for the Aussie dollar. Next up will be the dollar yen. So the dollar yen squeeze up as expected towards the 144.80 level. Then still recall that once it hit this level, I'll be looking up signs for exhaustion over here. So indeed, price action shape shows signs of exhaustion by having the hourly RSI now sloping downwards above and exit from the overbought level, and where it actually showed that bearish exhaustion is shown right exactly at the upper limit of this minor descending channel resistance that is still in place since the high of 13th of May. And now price action now has reintegrated back below the 20 and the 50-day moving average. So we'll be flipping back to a intraday trend bearish bias now, using a 145.35 as my short-term pivotal resistance level, slightly above last Friday intraday high of 145 figure level. All right, this 145.35 also confluence with the 76.4 Fibo retracement of that previous down move of 29th of May all the way down to 3rd of June over here. All right, and also coincide with the former minor swing high of 19th of April and 20th of 19th of May and 20th of May. So using 145.35 as my short-term pivotal resistance level, we will flip back to a intraday trend bearish bias for the dollar yen, with the first support level to watch will be at 144.25, okay, which is almost coming close to it. 144.25. A breakdown below 144.25 exposes the next near-term support level at 143.35, okay, which was Friday's Asia session low. Okay, 143.35. A breakdown below 143.35 revisit the key minor support level of 142.35 that has been in place since 26th of May. However, if price action do a bullish reversal U-turn and a hourly close above 145.35, today's intraday trend bearish bias will be invalidated to see a squeeze up to retest the 29th of May swing high area at 146.10. We also confluence with the swing high area of 16th of May as well. So that's for the dollar yen. Next up will be the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 now starts to shape a U-turn over here on last Friday, and right now it just hit the first resistance level, which is our short-term pivotal resistance on last Friday as well, at 24,090 over here. So given that it can't have a proper a breakout at 24,090, we may now see a bit of sideways movement, given the fact that we are and also due to the risk event that is taking shape in London thereafter, which is the trade talks between respective officials from US and China. I will flip to a neutrality stance instead, because given there is no clear proper bullish breakout that we are seeing from 24,090, so perhaps it could start to go sideways right now in the rest of today's Asia session. All right, so I'll adjust it slightly higher, okay, using the current intraday high 24,100 180. Okay, so this will be my upper neutrality limit. It's 0 on the intraday basis. Oops. Okay, lower neutrality zone will be last Friday swing low, where it shaped that U-turn minor bullish reversal. Okay, so this will be my lower limit, 23,750. All right, so neutral between 24,180 and 23,750 for a potential kind of a minor sideways rangy configuration for today. Only suddenly do we start to see a bullish breakout above 24,180 with an hourly close above it, then I could be more confident to validate a potential bullish trend bias for the Hong Kong 33, represent the Hang Seng Index, to visit the next intermediate resistance at 24,490, which is the 0.382 Fibo extension from the low of 9th of April, and as well as the congestion area of 7th of May, 7th of March, and 17th of March. Over here, above 24,490 takes us up towards the 24,850, which is the minor swing high area of 18th of March and 19th of March, and as well as coinciding with the upper limit of this minor ascending channel that I drew over here from the low of 16th of April. All right, so that's for the Hong Kong 33. Next up will be the Japan 225, representing the Nikkei 225. So the Japan 225 finally staged that bullish breakout above the 200-day moving average, which we have a bullish bias on last Friday as well. So given the bullish breakout of this 200-day moving average, we will tighten our short-term pivotal support now to the 20-day moving average, which will coincide with the congestion area of 5th of June and 6th of June at 37,680, pardon me. So using our first support level, which is the 20-day moving average at 37,920, pivotal support will be slightly lower, which correspond to the 20-day moving average, and as well as if we do the Fibo retracement of this current 5-wave up, 1, 2, 3, 4, 5, from the low of last Thursday on 5th of June which is last Thursday, that also coincide with closely with the golden ratio of 61.8%. So using 37,680 short-term pivotal support level, as long as this level is not surpassed to the downside, we will maintain our intraday trend bullish bias for the Japan 225. Next resistance level to watch will be 38,460. Above 38,460 exposes 38,850, which is close to the minor swing high of 13th of May and coinciding with the minor swing high area of 21st of February this year. Only hourly close and a bearish breakdown below 37,680 adjusted short-term pivotal support level for today will invalidate today's intraday bullish bias to see another choppy decline to revisit the minor swing low of 5th of June and 2nd of June, acting as the next near-term support level at 37,270. So that's for the Japan 225. Next up, the Germany 30, representing the German DAX. So the German DAX also on Friday, it was rather lackluster. Okay, it tend to actually now trade sideways. Over here, the RSI now is attempting to break down below the 50 level mark over here as well. So there could be a risk of a minor pullback taking shape during the start of the European session. So no major changes in terms of levels. I'll be still using 24,080 as my short-term pivotal support level, and now it's coming very close to the rising 20-day moving average. So if this pullback managed to hold during the start of the European session at above the 24,080 short-term pivotal support, we will maintain our intraday trend bullish bias. Next resistance level to watch on the intraday basis remains unchanged as well, 24,440/560, which is very close to the intraday high that was seen on last Thursday at 24,495 over here. Only a push down an hourly close below 24,080, that would invalidate today's intraday trend bullish bias to kickstart another round of minor corrective decline to revisit 23,820/23,675 next. A breakdown below 23,675 trigger off a deeper minor corrective decline to retest the minor swing low area of 23rd of May and 15th of May at 23,380. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 finally staged the bullish breakout above 42,528 and hit our first resistance level, lower limit at 42,870/43,085 before staging that consolidation that has taken shape on Friday and in fact in today's Asia session as well. So first support level to watch will be the pullback support of that 200-day moving average at 42,580, but I do not put it so tight as my short-term pivotal support level. I will use it slightly lower, which is this level here. It will be the 42,310 level. All right, so let me do the adjustment for you guys. 43,310. All right, so this will be my short-term pivotal support for today. So this will be the normal resistance support level. Okay, so I repeat, okay, short-term pivotal support will be adjusted to 43,310. All right, we're so confluence with the rising 20-day moving average, also the medium term ascending channel support that I drew from the low of 8th of April, this turquoise green line over here. All right, so given the fact why I tightened it to 43,310 for today, because we have a bullish breakout above the 200-day moving average on last Friday. All right, over here. So maintaining our intraday trend bullish bias on the US Wall Street 30. Next resistance level to watch after 42,870 will be the upper limit of that range at 43,085 next. However, if price action starts to do a much more deeper pullback below 43,310, that would invalidate our intraday trend bullish bias to see a rather choppy corrective decline movement to retest 42,100 and even 41,850, which is the minor swing low area of 27th of May, 30th of May, and 2nd of June. All right, so i.e. using a tightened short-term pivotal support for today at 43,310 to maintain our intraday trend bullish bias on the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 also pierced upwards, holding above the 6,000 level before it trades sideways at 5,986 as we're speaking right now. But price action still continues to actually hold above this medium-term ascending channel that I drew from the low of 24th of April. And with that also I will actually tighten my short-term pivotal support level and adjusted one upwards to 5940, which is the minor swing low area of last Thursday, also correspond very closely to the rising 20-day moving average. So as long as this adjusted short-term pivotal support holds for the S&P 500 for today at 5940, we will still maintain our intraday trend bullish bias. Next intermediate resistance to watch on the short term will be 60.50, above 60.50 may see 60.93 next, which is a Fibo extension cluster level. All right, however, if we start to see a price breakdown below this 5940 adjusted short-term support level, then potentially today's intraday trend bullish bias will be invalidated to trigger off a minor corrective decline sequence within its medium-term uptrend phase to expose the next near-term support level at 5850, which is the minor swing low area of 30th of May and 27th of May. Below 5850 may see a deeper corrective decline to revisit 5804, which is all confluence with the key 200-day moving average. So that's for S&P 500, still maintaining our intraday trend bullish bias with adjusted upward pivotal support for today at 5940. Lastly will be the Nasdaq 100 over here. So the Nasdaq 100, what we could see over here is that it continues to actually trade in a upward trend, holding above the 20-day moving average. And right now, we may start to see price action of the Nasdaq 100 starts to do a bit of a minor consolidation over here. So still no change given the fact that because it can't clear above last Thursday swing high at 21,887. Okay, it can't clear above 21,887, so there could be a risk of a minor pullback taking shape to revisit this minor V-shaped recovery that is taking shape on during Asia session over here at 21,500. So I don't put it so tight at 21,500. I'll still use the rising 20-day moving average, which will correspond to last Thursday or last Friday pivotal support at 21,330. Still using 21,330 as my short-term pivotal support level. Next resistance to watch will be 22,050. Above 22,050 will revisit the all-time high area at 22,200 / 22,250. Only hourly close and a bearish breakdown below 21,330 that would invalidate today's intraday trend bullish bias to see a minor corrective decline scenario unfolding, exposing the next near-term support level at 21,180 / 21,050. All right, so that sum up the intraday technical outlook on the major stock indices. Let us now focus our attention towards the commodities market, starting with gold XAU / USD. So for gold XAU / USD, as we know that it's now playing around the 20-day moving average, all right, and also the pullback line of this former descending trend line from the high of 23rd of May, broken out on last Monday and now turns into a pullback support at around 32.80 level. So I'll be using the 50-day moving average at 32.52 over here. We also confluence with the minor swing low of 29th of May, managed to survive after it staged a bullish breakout from this minor range resistance that was previously in place since 16th of May to 19th of May, and it's retest it before shaping that recovery. And if you were to do the Fibo retracement of this of the prior uh, minor uptrend from 15th of May all the way up to last Thursday intraday high, 5th of June, the 32.52 also correspond to the 50% retracement as well. All right, so using 32.52 as my short-term pivotal support level for today, will still have a bullish bias on gold for a potential short-term recovery. And given the fact that the hourly RSI now starts to exit from the oversold region, first resistance level to watch on the intraday basis will be 33.46. That was previously a minor support level from 3rd of June and 5th of June, now turns into a minor pullback resistance level. After this level breakdown, you start to see a kind of a very fast and furious intraday selling on last Friday. So this will be the first hurdle for the bulls to actually, in order to surpass, to see a much more meaningful recovery back towards 34.17, 34.35, which is the minor swing high area of 8th of May and 7th of May. However, if price action starts to shape a bearish breakdown with an hourly close below 32.52, then this minor decline scenario will be much more deeper to revisit 32.20 / 32.04, which also confluence with the medium-term ascending trend line from 31st of December 2024 low. So watching very closely the 50-day moving average, which is the close to our short-term pivotal support for today, 32.52, for a potential recovery for gold XAU / USD after last Friday's sell-off. We'll have a bullish bias for today as long as 32.52 holds. First resistance for the bulls to watch out for will be at 33.46. Next up, lastly, will be the West Texas oil. So West Texas oil able to pierce above this range resistance level that was previously in place since 23rd of April at 64.06. So we got to respect the positive price action on the intraday basis, and right now we start to see the extension of this corrective rebound that has previously taken shapes from 5th of May all the way up to 21st of May before it traded sideways. All right, so right now it's a bullish exit from this minor range configuration. So with that, the minor range configuration resistance will be indeed a key short-term pivotal support for us for today at 64.06. So we will flip to a intraday trend bullish bias for West Texas Oil for this potential extension corrective rebound scenario to play out. First resistance level to watch 64.40, above 64.40 may potentially seize the next resistance coming in at 66.27, which also correspond to the one-time Fibo extension taken from the low of 30th of May, and the 66.27 actually confluence with the congestion area of 4th of April. Only a bearish breakdown and the hourly close below 64.06 that would invalidate today's intraday trend bullish bias to see another round of choppy minor corrective decline move unfolding to revisit 62.74, which is the minor swing low area of 3rd of June and 5th of June, and also correspond to the 50-day moving average and 20-day moving average as well. So flipping to a intraday bullish bias for West Texas Oil using 64.06 as my short-term pivotal support level. All right, so that's also sum up the intraday technical outlook on all the major cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data and event to look out for? So the most important key data event to look out for will be the trade talks between US and China that will take place today, 9th of June in London. What time? Timing is not confirmed yet at this moment in time, and what time will it end? Definitely it's not confirmed as well. So do keep watch of the news flow headline, maybe perhaps from Bloomberg and as well as Reuters to see the latest updated news. And also other data to take note of for today will be Monday itself over here. Monday will be, in terms of the European session, will be a very quiet session as well. What we have is only at 5 p.m. Singapore time, we have ECB officials at the Alderson speech. And in US also will be a very quiet session. So market will be primarily focusing on in London during the start of the London session today at around Singapore time. We talk about 3 p.m. to see what time will be the exact timing between these two superpowers, China and US trade talks part 2 that is taking shape in London today. All right, so with that, that ends today's Daily Dose of Market Insights. I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.